Hi, Chapter 5, Income Statements. I think this is probably my favorite chapter of all, because I really like what we do. This really ties a company together so you can really see what they're doing. We're going to look at, I think it looks like 5 exercises. One is the cost of goods sold, which is a fun one to do. We're going to look at the income statement and retained earnings together. We're going to look at net income and comprehensive income. Then we're going to take a really quick view of a cash flow statement. And finally, we'll look at the results of a discontinued operation. Overall, it's a really good overview of how to create an income statement and what it stands for. I really like this statement that was in the book. It kind of ties together the 3 statements we'll be working with frequently in this course. And the income statement summarizes the results of operations for an accounting period. I think we all realize that. But the income statement and balance sheet are supported by the statement of retained earnings, and the retained earnings serves as a link between the two. So that's sort of the pipe that keeps the two balanced back and forth. And we're going to look more closely at the retained earnings statement as we go through here. Concepts of income. Well, we start out with this capital maintenance thing, and what capital maintenance is saying is you must have capital or resources before you can earn income, and it must be maintained. Now, the overall outlook or view of capital maintenance is a company begins with X amount of dollars, and when it closes out, which may be 20, 30 years, whatever capital's left over or is what it's made. That's its profit. Now, in a span of 50 years, most people wouldn't be real happy to wait around those 50 years to find out if it was going to make money. And our external people who are looking at how a business runs, if they want to loan money or if they want to invest in it, probably need a little more data than, wait until after 50 years and we'll tell you if you're making money or not. So what has been used in accounting now is the transaction approach, and that records the company's net assets at historic costs and does not record changes unless there's another transaction that takes place. And we use accrual accounting for that, which matches revenues and expenses. So that's kind of we're still maintaining the capital, but we're looking at a closer, shorter period of time, which is the operating period. And then we have comprehensive income, and that's the change in equity during the period from the transactions. And it includes all changes in equity except for those resulting in investments by owners and distribution by owners. So those are the concepts of income. Of course, we've got this wonderful equation: net income equals revenues minus expenses plus gains minus losses. And that's basically what we're going to be looking at in this chapter. Purpose of the income statement. 1, it is to evaluate management's past performance. 2, it's to predict future income. It's to assess the creditworthiness, try saying that 10 times, of a company. And then many times we use the income statement to compare companies to companies, especially if you're looking to invest in a company. The elements of the income statement are the revenues, which are inflows of assets. They're recognized when realized, and they have been earned. There are 4 other ways, or I guess I should say the main way to recognize revenue is in the period of sale. But there are 4 other ways of doing that. One is the percentage of completion, which records income in advance before it's totally done, or proportional performance. Again, it records the income before it's totally earned. You have the installment method, which defers income, and the cost recovery, which also defers. We're basically just going to look at the period of sale. I don't think we touch on any of these. Probably in a future chapter we will look at the percentage of completion and proportion. And I believe also the installation or installment method. So those are our revenues and how we look at them. Here are expenses, which are outflows of assets. They're recognized and matched against what? These revenues up here. And that's where the accrual comes in. We always are going to match. Then we move down to gains and losses. These are increases in assets from peripheral transactions, and that's not I'm not trying to confuse you. A peripheral transaction is something that's not directly related to operations. And they're different in that they're not directly related to operations. They're reported at net of taxes, and they may be recognized even if they haven't occurred yet. So we'll kind of dig into that a bit in this chapter. And they are classified in three categories. There can be an exchange of transactions such as a sale of equipment, holding resources while the value changes. A markdown of inventory is going to be a gain or a loss, basically a loss. And non-reciprocal transfers between company and non-owners, think lawsuit. So these are the things that you're going to show a gain or a loss on, and those will be recorded net of taxes. The final thing we kind of look at are the content of the income statement. We're going to look at each one of these. You've got the income from continuing operations. That's going to involve sales, cost of goods sold, operating expenses, and other items. Then you're going to tag in your income expense as related to these previous items. You're going to then put in the results of discontinued operations, the income of that operation before it was discontinued that year, net of tax, the gain or the loss of the disposal of it. So this kind of is laying out how the income statement should be set up. You'll then have extraordinary items, net of tax. That'll give us our net income. And every income statement is going to have this earnings per share. And we will explore all of these components in the exercises that I went through up here. A cost of goods sold, income statement, retained earnings. We're going to do a multi-step and a single step. We're going to look at net income and comprehensive income. That cash flow statement is going to be fun. The discontinued operations I will probably walk through with you. They can be kind of complex, but I think the one I have up will be challenging, so we'll see how we handle that. So welcome to income statements. I think you're going to enjoy this chapter. Nothing difficult, it's just a lot of detail. So let's get started with these exercises. Be sure to view the hints on this. There's quite a few very good hints to help you get going. Thank you. Have a great day.